Hi, Jonathan York, Bay Financial Partners, looking at the investment markets. Pretty nervous start to the US equity market for September. Continued worries now about a slowdown. That's sort of been backed up by job openings that are being at the lowest level for 3.5 years. And with the key employment data coming out this Friday in the US, expected to see around 160,000 jobs created. Now, just last week, the jobs numbers was actually revised down by about 800,000 over the last 12 months, to give an average around sort of 185 to 190,000 per month. So if you did come in at 160 odd thousand, that will be below the sort of 12-month average. So while inflation appears to be under control and certainly on a downward path, and that's sort of been acknowledged by the Fed, it's really quite ironic that equities are sort of selling off on this, potential weakness in the economy. It's quite ironic that, if there is weakness in the economy and the Fed has signaled they're now ready to start cutting interest rates, potentially later this month you could see a 50 basis point cut rather than a 25 basis point cut. Now the Fed meets 17th and 18th of September. And potentially what it does do as well is sort of heighten the probability of a further cut before year end. Now certainly rates are backed up quite aggressively in the US, 10 years back to 372 and the 2 years back at 375. So if you look at the 10 years down around 75 basis points or 3/4 percentage point over the last couple of months, the 2 year is down about 125. Now on the political front, Trump's case against election interfering resumes in Washington. Now that's just a further issue that Trump has to come up with, because certainly in the polls, as the Republicans appear to be sort of losing a bit of momentum. The Democrats certainly do have momentum. And certainly the Republican hierarchy are trying to pull Trump back onto track as increasingly he seems to go off script on his presentations. Now we talk a slowdown in the US. Oil has cracked 70 bucks now. It's currently trading at 69.30 and change. And no surprise that OPEC Plus has delayed any increase in production as oil prices have fallen. Now in the UK, again, some encouraging news on the manufacturing front. The latest PMI figure is one of the highest levels for about 40 odd months, coming in at 52.5 versus the 52.1 expected. So that's certainly all good news for the UK economy, and potential as well, still looking at at least one further rate cut before year end, possibly two. Now, a similar case in the EU region as well. The ECB is expected to cut interest rates, if not this month, then next. Inflation is certainly under control, currently running around just over 2%. Now in Australia, it's quite interesting. The recent sort of tax cuts, rather than being sort of inflationary, it looks like that sort of extra money is actually being saved rather than spent in the economy. Now, if that is the case, and that sort of is a less sort of inflationary, certainly inflation is coming down in Australia, and again, potentially the Reserve Bank, while talking a sort of tough game about sort of keeping interest rates where they are and not looking to cut interest rates until sort of mid-2025. But if you did see a 50 basis point cut from the Fed, then I suspect there might be a little bit of sort of pressure and sort of FOMO from the Reserve Bank of Australia to cut interest rates. Indeed, potentially a little bit of a stoush coming between the government and the Reserve Bank. Some of the government officials come out and said the reason why the economy is sort of faltering a little bit is because of the high interest rates. Now in New Zealand, quite interesting, the latest ANZ business confidence survey, that showed a bit of a pickup there, and businesses are a little bit more optimistic over the next sort of 12 months. Now there can be no coincidence there that comes on the back of the Reserve Bank cutting interest rates and signalling that potentially we're looking at an interest rate cut now at sort of most meetings for the next sort of 6 to 9 months. So with confidence picking up and certainly a little bit of increased activity as well in the housing market, potentially there is sort of light at the end of the tunnel for the New Zealand economy. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.